Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
Welcome, everyone. This is Steve Meisinger, your host for today's ISE webinar. Today I'm pleased that we have Toni Hansen with us. Toni is one of the most respected technical analysts and traders in the industry with a high reputation for accuracy in both bull and bear markets. And she's going to be sharing her expertise today with us as she'll be talking about identifying price targets in FX options using measured moves. Toni has lots of great stuff on her website, tonihansen.com. She has trader education, free lessons, and you could buy DVDs and many other things, many other trading tools, aids right there at tonihansen.com. Without further ado, I'd like to introduce Toni Hansen. Toni, thanks for joining us.
Hey, Steve. Thank you. I'm glad to be here. Let me grab the controls here from Steve and make sure you guys can see my lovely drawings. Okay, I'll draw a smiley face. There. Does everybody see that all right? I hope so. Okay, great. Okay, like Steve said, today I'm going to talk about using, basically identifying price targets in the FX options using measured moves. And for those of you that have been with the ISE webinars for a while, I've been doing these for a couple of years now, so maybe even a little bit longer than that. And I like to take subject matter that we've covered before and kind of expand upon it, go back and use previous examples so that you can see how well the concepts that I teach really hold up over time. I just got back from the New York Traders Expo just over a week or so ago, and when I was there, actually the topic that I talked about dealt with the expansion of a session that I gave for ISE in Las Vegas 2 years earlier, where we were looking at identifying currency action and what to expect from the U.S. dollar in the future. And so you're going to see some of the material from that expo in New York also shown here in a couple of the examples. So to begin here, let me forward through some of these. The disclaimer in terms of use, copyright material, of course, for everyone to see. Looking at options, every time you're looking at trading anything, you're dealing with a certain degree of risk, of course. Now, about FX options, Steve can talk a little bit about these more at the end of the session, but here's just a list of the ones that the ISE is offering. So you're seeing that for the most part we're using the U.S. dollar as the base currency, but they've also added the counter currencies to a couple of the pairs as well. So you now have the options where in a lot of cases they would look flipped when you were comparing them to the spot market, but now you're starting to see some introduction of some additional ones as well. Now, my system of market analysis is rooted in basically what I've termed the 5 basic building blocks of price development. And these are really critical to timing accurate target levels as well as your entries and stop points and anything else when it comes to developing a strategy in the market. This system really relies upon a lot of the basic things that you've heard discussed over and over again, things like support and resistance levels, things like trend development. Also, I expand and go into a couple of things that a lot of people really don't focus on as much, and they certainly didn't when I started teaching these classes many years ago, and that's things like pace or momentum and correction periods that take place throughout the day and at different times during the year. And we're going to touch upon these topics throughout today's session, particularly pace or momentum, because the topic that we're looking at is how to assess target levels. Of course, when we're dealing with options, it's very important to know not only about what you're looking for on a position, what your anticipated gain is going to be, but also how long it's going to take before it hits those levels for those gains, so that you can make sure that you're positioning yourself in the correct option. Because you might be right on direction, but if you've got your timing wrong on how long it's going to take to hit that target, you could still be out money. So the 2 building blocks that are really the most important when we're looking at identifying these target levels are going to be support and resistance levels and momentum and pace. And I'm going to cover these here a little bit more in detail. Support and resistance, these are basically just price zones in the market where a security is liable to react in some manner that affects the trend that's in play as the support or resistance level hits. Now, these measured moves that we're going to be looking at today are one particular type of support and resistance. They're a type of price support and resistance. The next thing is going to be the pace or the momentum of a move. And it's basically just the measurement of the amount of time it takes for a security to establish a movement in price as compared to earlier price moves of the same amount. And this is going to be very important as well, because when we're looking at measured moves in the market, we're looking at two different moves. We'll have an initial move, such as A here, and then there will be some sort of a correction. It might be a base at highs or lows. It might be a slow or a gradual pullback, but we're looking at some sort of corrective move. It might even be a triangle type of pattern. And then you'll see a continuation move. And when we're looking at the measured moves, we're looking at each of these two. Let me clear this here. So in the first one, when we are looking at what I referred to as the support or resistance levels, we're looking at the price amount of this move. How much did this move? How many points? How many pips? You want to give that a measurement. Let's just say it's 10 here. Now, establishing a target level, a lot of times on a breakout or continuation, the thing that is really neat about technical analysis is that over and over again, when you see a continuation move take place, it's very common that that continuation move will mimic an initial move in the same direction within a trend. So let's say in A, we have a 10 pip or 10 point move. Then in B, what we would be looking for as a target level would be another 10 points move. So we're measuring and comparing those. But there's a couple of things that you have to keep in mind when you're looking at this. Here's one example of it. We have a measured move that just took place in YUK, which is the dollar-yen option. And this is on a daily time frame here. And what you can see is that there was an initial rally off of a support at lows. We had the corrective move. And then there was a continuation of that move to the upside, the initial upside move. And because the momentum or the pace of this continuation got off to a very comparable start and continued at the same pace as this initial upside move, it became very easy to look for and establish a target level. And when I'm typically trading these continuations or breakout type of patterns, this is where my initial target level is going to be. Now, there's going to be a couple of things that can affect whether or not it hits those target levels and whether or not it does so at a more rapid pace or a more gradual pace. But to start with, we're just going to look at these equal ones. And here's just that really good example in the YUK. If you look carefully, you can even see that this corrective move had two moves as well. And the momentum of each of these moves is also very similar. You can see that these are practically parallel lines when you're transecting each of these trend moves. And by establishing these parallel lines, it's showing you that that pace or the momentum is also comparable. So you have a very clear feeling that if this takes, say, 8 days to hit a high, and you have the correction, and it starts off again, you'd be looking for approximately another 8-day move before it hits that equal move zone. Let's look at another example. This is the EUI, which is the dollar-euro. And again, we have another example of this taking place, where we had this downside move here. And for those of you that have studied Elliott wave and trends development, you'll also notice that this downward wave had 3 waves of selling in it. So that was a little bit of a clue that you're going to see correction here. And then the continuation move, the overall momentum of the move was also the same as that initial drop. So going into this, right from the start here, you would have an initial target level down here around 70 or so. But something I want to show you here as we look at this is that this initially started off with some faster momentum. And if that had increased, we'd have actually seen this push through this target level probably to around here to give us a little bit more than what we would have originally anticipated. However, it hit the support from back in here, and the momentum slowed and shifted. So the overall pace of the entire move ended up being exactly what we would have looked for to begin with, where it did hit that equal move level literally almost exactly. And when I'm looking at a lot of individual securities, it's really interesting because there's so many times that I've seen it hit these equal move levels within like a couple of pips on intraday charts. It is that accurate. Or if you're trading stocks, it could be within a couple of cents, say you're trading off of a 5-minute time frame. And it's really a powerful, powerful tool for not only giving you a bit of a clue to how long it's going to take to hit a target level, but also what that target level is going to be. You can see a smaller one here on the counter correction, where once again, similar momentum and similar to equal moves. Now, in a lot of these currency pairs, you're going to be dealing with gaps, especially overnight. And the same concept still applies when you're dealing with securities that are gapping. If you have a gap or a move lower, let me change the color here. Oops, it's not doing that. Okay, there we go. So if we have a gap or a move lower, even if this doesn't really give like a decent breakout setup, where let's say you would have it gapping down into here and triggering the short, the same thing will apply, that as it gaps and pushes lower, you're still looking for that equal move level as a target zone. Now, the important thing here, however, is that with this gap, the initial gap here, compared to this gap here, the gap amount is approximately the same size. And this is going to play a big role in whether or not you have that equal move level hit, whether you have a lesser than equal move level hit, or whether you have a greater than equal move level hit. And I'm going to show you this in another example a little bit later on in the presentation. This is a chart that goes back to a class that I taught, oh goodness, it might have been about 6 months ago. You can find archives of a lot of these classes that I've done for the ISE on their website if you look under Education, and you'll find an archive link in there. So you can go back and listen to some of these as well. Now, here's where we were looking at if the pace or the momentum shifts. So here we have an example of the momentum shifting as it broke out for a continuation move. And again, there's things to look for that can give you a clue ahead of time whether you're going to see a higher probability of a slower follow-through or a higher probability of a more rapid follow-through. One of them, for example, is when we look at trend placement. And I'll actually show you a slide of this here a little bit later on. But a lot of trends, they develop with 3 waves of upside, 2 waves of corrective action in between. And as long as you're within these first couple of continuation moves, this one here or this one here, you have a pretty good chance of being able to use that equal move to help establish the target levels. Now, it's important for this third move here that each of these corrective moves in between them, such as this one and this one, are also equal in terms of how long they take to develop. So maybe the first one takes 30 minutes. Then you want to see the second one also take about 30 minutes in order to help you get a better grasp of whether or not this is going to be a decent continuation and give you that equal move target. Now, if you're heading past that level and it tries again for a fourth move, the chances are this is not going to give you that equal move target. In fact, it's going to be based upon how that correction took place in between here. So this last correction or last pullback here at the very end, the momentum of that correction is going to help determine what the momentum and price target is going to be of an attempt to put in a fourth move. Oftentimes, if this price correction off the third high is gaining in momentum, you might not even see it retest this third high. It might fall a little bit short. But if it just has this gradual pullback, holds within the upper 50% of the third rally, then you're looking at a higher chance of getting maybe a slightly higher high, but oftentimes still that momentum is going to be slower, and there's a lesser of a chance for it to hit that equal move target level. Here's an example. Remember, I was just telling you about how gaps can play a role and also how it can affect the momentum. Here, you can see that there was an initial move here. Again, this is, we're looking at the AUX, which is the U.S. Aussie dollar. And this had a gap within that first move on the downside. And it had another gap as it continued the move. But if we went and looked at this initial push to the downside here, heading into the 24th, what we would have seen in previous action is that this was a much more rapid move than a lot of the previous moves, and we were also getting, I believe we were seeing some trend exhaustion as well. I don't have that chart still up here, but I believe that's what we were looking at. And with the smaller gap here, it makes it a little bit more difficult that you're going to see an equal move compared to that previous drop. A lot of times what ends up happening is you see a slower follow-through. You'll see more gradual momentum. So if this were putting in that equal move, we would have looked for a target level down here. I believe it's around 98 or 90. Yeah, 98 there. And that would have been what that equal move target zone would have been. But if you looked at larger trend placement as well as smaller gap levels, you would have expected that there's a higher chance for it to not quite hit that equal move level. Here's another example where we have a slower momentum follow-through. This is another gap dealing with it on the upside here. The initial drop is very, very rapid. This is the CDD, which is the U.S. Canadian dollar. It has a typical two-wave continuation pattern and then another follow-through on this. And we have a slower momentum move on this follow-through. So it doesn't quite hit that equal move target level, which is around 105.10, 105.8. Instead, it stalls at 105.25. And it holds that zone and falls into another two-wave correction here. But it's because this momentum kicks off more gradually than the initial drop kicked off around the 107.25 level. Now, there's also going to be instances where B will end up being stronger than A. It can more easily put in a larger than equal move. This happens a lot of times when you're dealing with something that's coming off of lows. So let's say a trend is exhausted on the downside, and you're starting to see momentum beginning to shift. And say we've got an upside move here. And this is the equivalent of A on our illustration over here. Then a lot of times you might see a correction here, and it can pick up momentum and actually put in a stronger than equal move. So a very common location in the overall trend where you will see this larger than equal move is going to be coming off of a low. And a lot of times that will be a situation where, let me clear this and show you again, where it might look like, let's say we've got some rounding off at lows here, and it sort of is pulling up a little bit like this, but the momentum really hasn't increased to any degree. And then you get a correction, maybe like a two-wave correction here. And then it'll pop up and put in a larger than equal move where you're comparing this low to this high and this low to this high. So these are really good examples of where you will see that momentum increase. And it can help you adjust your target levels to shoot for a higher target zone. Here's one example of one that gave us that greater than equal move. And this is one from a previous class that I taught. You can see the initial rally here out of the breakout. It's kind of slow and kind of steady. And there's a more gradual correction off of the high. And this is another common type of continuation where the momentum will actually increase and give you a larger than equal move target. And in this case, the momentum just gradually builds here. And you can see that that equal move target level would have been right here, but it actually pushes to 67, a little bit even higher than that as it breaks out. So when you're seeing breakout moves where you have a slower than average move going into a base or congestion zone, that momentum of that slower than average upside can also make it easier to give a stronger breakout. Whereas on the other hand, if you have a really strong upside move to begin with and a correction, there's going to be a higher chance that it might be slower than average. And that's going to be if this upside move is substantially larger than most of the previous upside moves you see in a security. Now, a lot of people ask, well, how do you judge what is average, what's above average? How do you know if that move really is a lot stronger than you would expect from an average move? Well, a really great way to look at that is go back and look at the security and look for like a V bottom or a V top. And a lot of times that momentum or pace on both sides of that V is going to be what you can consider to be about an average pace of a move in that security. So if the rally is substantially stronger on the side of a V, whether it's coming off of a high or coming off of a low, then you have a higher chance of getting a slower follow-through on the breakout and not hitting that equal move target level. Here's another example where we saw the momentum start to pick up. Here, breaking down, and this is common coming off of a high. A lot of times you will see this, again, like I said, as a new trend begins, you'll see the momentum increase. And so we were coming off of this momentum shift here where we had a slower move on the upside compared to a stronger move, and then we had a breakdown here. And then it based and congested, and then it gave us a continuation move. And a lot of times that continuation move will be stronger than the initial breakdown here. So another good example of where you will see it be able to push through that equal move level. In this case, it doesn't do it by a lot because we're dealing with other levels of support back in here. But it does push through that level, that absolute level. So you're not seeing it be an example where it's holding and hitting it to within a couple of pips or a couple of ticks.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.